All right, a quick end of day recap. This should be a pretty short one. It was a fairly uneventful session in the index today. Essentially, coming into the day, what we wanted to see was whether or not price would break this prior day range. So here's that FOMC move. We're looking at a regular trading hours chart of ES. This is the 5-minute. Yesterday created potential new range here, 4750 by 4792. We're just going to round up, call that 4800. So 4750 by 4800 was kind of the idea for today's action. And essentially what we saw is price. I mean, look at the action today. This is very typical Quad Witch Friday type of action where you just have essentially what I call barcode action. The 5-minute chart just looks like a barcode here. Not a lot happening, not a lot of activity. Yeah, you can definitely scalp it, grab a couple points here and there, but as far as, grabbing a 10-point play or something like that, really unlikely. Better to just sit on your hands, not trade at all. Do some other productive trading work, like review your week, go through your playbook, clean that up. I mean, there's a lot that can be done outside of actual trading. So overall, pretty uneventful session. As far as what we'll be looking at on Monday, I'm still going to be looking at this near-term range, 4750 by 4800. The main objective of buyers right now, of bulls, is to continue to defend this July high, the red zone right through there that you can see. That's from the daily chart. So price staged a big breakout here on the FOMC day. Now price, as expected, is pretty much just showing a breather. Anytime you have that big volatility expansion move, it's time to expect some contraction, and that's what the past two sessions have been. Big time volatility contraction. It just means that price is going to trade in a tighter range, and that's pretty much what we're seeing. So we'll continue to trade 4750 by 4800. That'll be on watch on Monday, just looking to see, how this structure continues to develop. As I mentioned, buyers want to see this red zone defended as support now. So a retest of that 47.35, 47.20 zone is not out of the question. That would not be unusual whatsoever. A retest of the breakout point is actually quite healthy. And so we may see that next week. But regarding next week and the week after, I do expect continued slowness. We are coming into Christmas, and much like Thanksgiving, that is generally speaking a time when the markets are moving quite a bit slower. You have lower volumes, and so it's not the time to really be gunslinging. You want to be more cautious during the next couple of weeks as we get into the new year. So expect continued range trading is what I would say about that. Let's take a quick look at NQ and QQQ. Expecting more of the same here. I did notice some relative strength versus S&P in NQ this morning. And that's kind of what we saw today, is a push higher off of the open, which definitely is not what we saw in ES. So NQ, the tech-heavy NASDAQ, continues to lead, continue to show tech as a leader. The watch here was very similar to ES. You wanted to see essentially this near-term range, if it was going to resolve or not. Obviously, the answer is no. We had to test a prior day high, no break there, and now we're just kind of oscillating near this near-term range volume point of control. So 16,800 is a decent reference point down into the 16,650. And we're looking at 16,900 as well. Those are the three reference points to keep an eye on with NQ. That does bring me back to ES. I did want to take a look at the near-term volume point of control there. Let's flip back to that chart. Let it load. So this originally was at, you can see it just kind of shifted here. The high volume node previously, and the volume point of control was right here at 47.75. It's now shifted down into 47.68. So potential accumulation of shares a bit lower, or of contracts a bit lower. Something to keep an eye on. I expect that it will just continue to be right here in the middle of this near-term range. as always, I'm just using that as kind of a reference point rather than a big level of interest or a big key level. It's a reference point that you can use as an area of support or resistance, but again, it's going to usually be a weaker level compared to like the edges of the range, right? So that's ES, pretty uneventful sesh. Like I mentioned, these OPEX days, these quad witching, triple witching, whatever you want to call it, these days where you have the options rolling over, good days to just be doing less, right? Not every trading day is created equally. There's going to be times when we know it's going to be slow, and you want to use that information to your advantage. Absolutely. There's only so much mental capital that we have as traders, especially getting into the end of the week. And so if you can, come into the day saying, well, I'm just not going to trade today, or I'm looking for a very specific opportunity, that's a good way to go about these types of days rather than, just taking every nonsense trade and ending up with a red day. As far as individual names, the scans were incredibly dry. Not that surprising considering it is off season. Earnings season is over. The only name that I saw that looked decent as far as a day trade or a potential setup on Monday was this DOCU. Apparently they are attempting to sell the company. And so we'll be keeping an eye on this. Price is attempting to work its way out of a big weekly base here. So we have been trading this for the past week or so, past couple of weeks, ever since earnings, essentially. It did force that big change in character that we talked about earlier this week, and now it's just showing follow through. Not all that surprising to see this reaction to the news. So we just want to see if there's going to be any follow through on Monday. Treat it like a true second day play. You want some action above that first day volume point of control, which is right here at 62.5. So that'll definitely be on watch, but that's it. That's it for individual names. We just had the DocuSign and then ES, near-term range trading. Let's get some eyes on SPY. I see a bit of a rally here into the close. Let's take a look at SPY here. So yeah, SPY pretty similar. I like to go to the 15-minute chart. You can see just that oscillation here near the near-term volume point of control. Tight range day. SPY did gap down this morning. That was due to the dividend. So SPY, keep in mind, SPY does pay a dividend. That was today. So if you're looking at the chart thinking, oh, big gap down, must be some news, you want to make sure you're not looking at the dividend day. And then always, you can cross-reference with something like SPX. No gap down in SPX. Look at this rally into the close. Or cross-reference with ES. So back into 47.75 here. Let's get a quick look at the weekly chart. Yeah, pretty clean breakout here. Our next area of interest on the weekly time frame chart is the 48.50. These highs up through here. Let me make this full screen. These highs right up through here. So there is a volume void essentially above this week's high up into 48.70 or so, 4,900. Now the thing is that we have shown after this week closes, we have 7 consecutive weeks higher. It's pretty rare. That is pretty rare. That is uncommon. So, we may be due for a breather here. We may be due for a pullback on the weekly time frame, which kind of aligns with that end of December slowness. So that is something I'll definitely be keeping in mind as we get into 2024. But other than that, yeah, it's pretty straightforward. Hope everyone had a great week. Hope everyone had a great day. I will see you guys Monday morning for the pre-market prep live stream. If you're in the Traders Think Tank and you have any questions, feel free to shoot me a direct message over the weekend. Be happy to help you out. All right, take care. Later.